Marc Lipschultz is global head of KKR's energy and infrastructure business. He is standing by with our Cristina Alesci of our Bloomberg Deal Desk. Cristina?
Thank you, Scarlett. And thank you, Mark. This is the first time that you talk about KKR's multi-prong approach to energy investing, so we're very happy to have you here.
Thank you for having me. A pleasure to be here.
Now, private equity has been active in energy for a long time, but, you and your competitors are very concentrated on it now, raising specific funds to execute specific strategies, and I'm just wondering, why now?
I think the interest in energy today, by us and others, reflects a long-term bullish opportunity set for investors in the sector. At the end of the day, when you look out 10 years, 20 years, the reality is the world is going to consume a lot more energy then than it does now. And we have to go find those supplies. And when we find them, we then have to deliver them from where they're being produced to where they're being used. And all of that takes a lot of capital. And I think that at its root is the opportunity and the motivation for people like us really committing a lot of resources to this area.
Now, with all the money flowing into the sector, is there a danger that asset prices may go too high, like sort of what we've seen in the traditional LBO space a little bit?
I think there is a need for a lot of capital. So actually today, if anything, I think this sector needs more capital. Think about the intensity of doing what we're doing in the energy complex today. Just to develop a subset of the shales that we know about in North America today will probably require $1 trillion. Developing the infrastructure needed to move the energy around the world, trillions of dollars more. Now, this is over many years. So actually, I think there's a need for a lot of capital. Of course, there's always a danger. I don't think the danger is too much capital, though. I think the danger is people with capital not really understanding this business. It's a complicated business. So I think the greater danger is, perhaps capital in the hands of people that are not really initiated in the industry.
Right. So you mentioned shale, and when it comes to shale investing, KKR has done some pretty successful deals. But BHP's $12 billion deal for Petrohawk has raised some questions as to whether shale assets have become too expensive, especially in places like the Eagle Ford. I'm just wondering if that's something that you're worried about and how you address that concern when you're looking for investments in that area.
Well, we're always concerned about making sure that we're ahead of the curve, right? That we're investing in opportunities before there's a consensus view that that's the place to be. So, in fact, as I think you know, we had a very large investment in the Eagle Ford that we recently agreed to sell. We had a very large investment in the Marcellus Shale in the very early days before there was sort of a consensus around that opportunity. So there's always a danger, of course, of prices getting too high. Again, I think it gets back to this same point, which is to invest in this sector, you really need to have a lot of conviction about where you're going to invest, when you're going to invest, why you're going to invest. So I think we always see this danger that prices can rise and people can get a little bit exuberant about the opportunity. And that risk exists in unconventional. But there remain great opportunities in unconventional if you have the right skills to go after them.
So is it just a matter of picking the right shale plays? And if so, which ones aren't? I mean, I don't want to give away all your secrets, but which ones aren't? There are areas that you're saying that aren't getting attention, and those are the areas that you're focused on, and what are they?
Absolutely. Well, so what I'd say is this. There are new areas all the time. There are emerging opportunities, and of course we're out looking for the next one, the next Marcellus, the next Eagle Ford. That's been a hallmark of what we've tried to do. And there are others out there, and maybe we'll build our position before we share exactly what those are. But also within the existing plays, again, recall all the capital that's required to develop these positions. And even within each play, there are good parts and there are bad parts. That's why it's very hard to kind of generalize about the shales, for example, and say they're either too expensive or they're too cheap or they're good or they're bad. It's very, very specific. So what we're looking for are very particular positions in very particular plays. And it's also very important who you're operating with. What kind of technical skills do you have? What kind of operating skills? These are actually technically very complex exercises. So what we're looking for are the right plays and the right partners. And that's what we're trying to be, is really a partner to the industry in capturing this opportunity.